The island still looks perfect from above, a palm carved into the sea, each frond lined with villas that promise privacy, power, permanence. Lights glow at night. Water reflects gold. It feels untouched, controlled. But step closer, and something begins to feel off. Windows that stay dark longer than they should. Driveways without movement. Properties that look finished, but not lived in. And then the detail most people miss. Flight records, property listings, and occupancy reports from late 2023 into 2025 begin to show a quiet pattern. Turnover increasing, shorter stays, more listings entering the market than expected. Not dramatic, just enough to raise a question. Because this isn't just any development. This is Palm Jumeirah, one of the most expensive artificial islands ever built, a symbol of success. So if the symbol starts to shift, even slightly, it means something deeper is changing, something not visible in the skyline, something not announced in headlines. And once you notice it, you can't ignore it. Because places like this don't empty suddenly. They transition quietly, until one day, the illusion doesn't hold the same way anymore. So the real question is Palm Jumeirah still what it was designed to be? It began with a promise that felt almost impossible to doubt. In the early 2000s, Dubai introduced the world to an idea no one had seen before at this scale. An island shaped like a palm tree, stretching into the Arabian Gulf, more than 5 kilometers long, over 1,500 villas, dozens of luxury hotels, private beaches, absolute exclusivity. And the message was clear. This wasn't just real estate. It was status. Ownership here meant something. It meant you had reached a level where geography could be designed for you. Investors believed it. Global elites bought into it. By 2006 to 2008, properties were selling rapidly, with prices rising by over 50% in certain segments within short periods. Even after the 2008 financial crisis slowed things temporarily, the long-term narrative remained intact. By 2021 and 2022, Palm Jumeirah saw record-breaking transactions again. Villas selling for over $20 million, some exceeding $40 million. Reports highlighted year-on-year growth above 30% in prime segments. It felt unstoppable. Because the belief wasn't just in the property, it was in the system behind it. That Dubai could create value where none existed before, and sustain it. But belief, once established, doesn't disappear instantly. It changes slowly. Quietly, almost invisibly. The shift didn't come with empty streets or abandoned homes. It came with patterns, subtle ones. By late 2023, analysts began noting an increase in listings within ultra-prime zones of Palm Jumeirah. Not overwhelming, but noticeable. At the same time, rental markets showed a change in behavior. Short-term rentals increased. Long-term occupancy became less stable in certain clusters. Some villas that once housed full-time residents began rotating guests instead. It looked like flexibility, but flexibility often signals uncertainty. Then came the behavioral shifts. Owners spending less time on the island, seasonal presence replacing permanent living, travel patterns changing, private jet movements aligning less with long-term stays and more with short visits. Again, nothing dramatic, but consistent. And consistency matters, because in high-value environments, behavior changes before prices do, before headlines do, before public perception shifts. And those who watch closely know this. They don't wait for confirmation. They respond to patterns, even small ones, especially small ones. The numbers begin to add weight to what behavior suggests. Real estate data from 2024 shows an increase in luxury property listings on Palm Jumeirah compared to previous years, with some reports indicating double-digit percentage growth in available inventory in certain quarters. Transaction volumes remain high, but absorption rates begin to fluctuate. Properties take longer to sell than they did during peak demand cycles in 2021 to 2022. Rental yields, while still strong, face pressure from increasing supply in high-end segments. At the same time, but maintenance costs rise. Service charges for beachfront villas and apartments increase due to infrastructure demands. Cooling, security, landscaping, marine maintenance, all essential, all expensive. And then there's occupancy. Hospitality reports show variation in hotel occupancy rates across the island, especially during off-peak months. None of these figures suggest collapse, but they suggest something else: saturation, adjustment, a system that is no longer accelerating at the same pace. And when growth slows in a market built on momentum, perception begins to shift faster than the data itself. To understand why this matters, you have to understand how Palm Jumeirah functions beneath its surface. It isn't just land, it's engineered land. Built through land reclamation, supported by continuous maintenance, protected by breakwaters, and dependent on infrastructure that operates constantly. Water circulation systems, beach erosion management, structural reinforcement, all part of daily operation. This isn't a passive environment, it's active. And active systems require constant input. Financially, the island operates within Dubai's broader real estate ecosystem, where demand drives expansion and expansion reinforces demand. But this creates a loop. If demand slows, even slightly, the system doesn't stop. Costs continue, maintenance continues, development expectations continue, and that's where pressure builds, because high-value properties rely on sustained perception of exclusivity and growth. If that perception softens, even a little, the entire value structure becomes more sensitive, not broken, but exposed, and exposure changes how people behave. The breakdown, when it begins, doesn't look like failure, it looks like adjustment. Developers introduce more flexible payment plans, sellers become more negotiable. Rental markets shift toward short-term models to maintain income flow. These are strategic responses, but they also signal something deeper, that the original model, steady appreciation, consistent demand, is being tested. In some segments, price growth stabilizes. In others, slight corrections appear, not across the board, but enough to be tracked. And then there's time. Properties staying on the market longer than before, weeks turning into months in certain cases. For a location that once moved at speed, time becomes a factor, and time introduces doubt. Not fear, just doubt. And doubt is enough. Because in luxury markets, confidence is everything. Without it, decisions slow. And when decisions slow, momentum fades. Not suddenly, but steadily. The human impact sits quietly behind these shifts. For full-time residents, the experience begins to change. More properties around them are used for short-term stays. Neighborhoods feel less consistent, less stable. For investors, returns require more active management, more attention, more adjustment. Property managers see increased turnover. Service staff adapt to changing occupancy patterns. For workers across hospitality and maintenance sectors, demand becomes less predictable, not disappearing, just fluctuating. And fluctuation creates uncertainty. Even for high-net-worth individuals, the equation shifts. Ownership is no longer purely about status. It becomes about performance, about sustainability, about long-term value. And when those questions enter the conversation, behavior changes. Quietly, gradually, but permanently. There are deeper layers shaping this movement. Cost of living is one. Maintaining property on Palm Jumeirah is significantly more expensive than in most parts of the city. Service charges, energy costs, upkeep, all rising. Then there's environmental pressure, rising sea temperatures, humidity, and long-term concerns about sea level impact. While not immediate threats, they influence long-term perception, and perception drives high-value markets. Then there's oversupply at the ultra-luxury level across Dubai. New developments entering the market, offering newer designs, newer incentives, newer experiences. Competition doesn't destroy demand, but it divides it, and division reduces concentration. And which affects places like Palm Jumeirah more than most, because its value depends on being the place, not one of many. Zoom out, and the pattern extends beyond one island. Artificial luxury developments in different parts of the world, from coastal expansions to reclaimed land projects, face similar questions. Sustainability, long-term maintenance, demand cycles. Even cities like Miami, Singapore, and parts of China have begun reassessing how engineered environments perform over decades, not just years. Palm Jumeirah becomes part of a larger story, not an exception, a case study, of what happens when ambition meets long-term reality, and how markets respond when the future becomes slightly less certain than the past. The realization doesn't arrive all at once. It builds slowly. Palm Jumeirah isn't empty, not in the way people imagine. But it's changing, and change at this level reveals something deeper, that even the most iconic developments are not fixed. They evolve with the systems around them, with economics, with environment, with behavior, And sometimes that evolution moves away from what they were originally designed to represent. Not failure, but transformation. And transformation always comes with a cost, seen or unseen. So now the question shifts again. Not whether Palm Jumeirah is still valuable. It clearly is. But whether it remains what it was meant to be, a permanent symbol, a fixed idea, or something more fluid, more dependent on forces outside its control. If you were there, looking at the same skyline, the same villas, the same water, would you see the difference? Or would it still look the same to you? That's where it becomes interesting. Because the biggest changes don't always show themselves clearly. Sometimes they hide in plain sight. If this made you look at things differently, even slightly, then there's more beneath the surface worth exploring. Share what you think, and stay with this conversation, because some of the most important shifts don't happen loudly. They happen quietly until everyone notices at once.